There's a mechanism in history that has transformed free citizens into permanent taxpayers in just 112 years. And right now in 2025, that system is completing its final stage, closing every exit, eliminating every escape, building a global surveillance network that makes tax avoidance impossible for anyone. In 1913, the United States introduced the income tax. It applied to 1% of the population. The rate was 1% on income above $3,000. That's $92,000 in today's money. Only the wealthy paid. And they paid almost nothing. By 1943, the government had perfected automatic withholding. Your employer takes taxes before you see your paycheck? You never touch the money. You can't hide it. You can't resist. It just disappears. By 2025, the system is global. 140 countries exchange tax information automatically. Every bank account is reported. Every transaction is tracked. Every asset is registered. The digital surveillance is total. And there is no escape. This is the story of how governments built the perfect tax system, why they always claimed it was temporary, and why the math says you will pay more every year for the rest of your life. And it's happening faster than anyone wants to admit. Before we go through the pattern, you need to understand what income tax actually is. Not a policy choice, a mechanism of control. Income tax is the government taking money before you can spend it. Not after you buy something, before. Not when you choose to pay, automatically. The government stands between you and your labor. You work. You produce value. The government takes first. You get what's left. This is different from every other tax in history. Sales tax, you choose when to buy. Property tax, you can sell the property. Tariffs, you can avoid imports. But income tax is unavoidable. You work, you pay. You don't work, you starve. The trap is total. And here's what nobody explains. Income tax wasn't always inevitable. For 137 years, the United States had no income tax. None. The Constitution didn't allow it. The founders specifically designed the system to prevent direct taxation. The federal government could tax imports, exports, and excise goods. But not income. Not directly. Why? Because they understood that income tax is the foundation of tyranny. If government controls your income, it controls your life. But in 1913, that changed. And the change happened through a carefully orchestrated sequence of steps. Each step seemed reasonable. Each step was sold as limited, temporary, fair. Each step was a lie. Let me show you how they built the trap. Step 1: Getting it passed. 1913. The legal foundation. Before 1913, the U.S. federal government was funded by tariffs and excise taxes. Taxes on imports and specific goods like alcohol and tobacco. No income tax. The Constitution's Article 1, Section 9 prohibited direct taxes unless apportioned by population. That meant if the government taxed income, every state had to pay proportionally to population. If New York had 10% of U.S. population, New York paid 10% of total income tax collected. But New York might have 20% of the income. This made income tax unworkable. The rich states would pay less than their income. The poor states would pay more. It couldn't function. So for 124 years, no income tax. Then in 1894, Congress tried to pass an income tax anyway. 2% on income above $4,000. Only the top 1% would pay. The Supreme Court struck it down in 1895. Pollock v. Farmers Loan and Trust Company. The court ruled it unconstitutional. Direct taxation without apportionment violated the Constitution. The government needed a constitutional amendment. And they got it. The 16th Amendment. Passed by Congress in 1909. Ratified by the states in 1913. The amendment says, quote, "The Congress shall have power to lay and collect taxes on incomes, from whatever source derived, without apportionment among the several states, and without regard to any census or enumeration." End quote. That's it. One sentence. It removed the apportionment requirement. Income tax was now constitutional. And here's how they sold it to the American people. The promise was simple. Income tax would only apply to the rich. Only the top 1%. Everyone else was exempt. The rate would be tiny. 1% on income above $3,000. 6% maximum on income above $500,000. The tax would replace tariffs, which hurt the working class. Everyone below $3,000 income, which was 99% of the population, would pay nothing. It was sold as a tax on the wealthy to fund the government and reduce tariffs on workers. Progressive. Fair. Limited. The vote passed. October 3, 1913, President Woodrow Wilson signed the Revenue Act of 1913. The income tax began. And immediately, the trap started expanding. Step 2. Expanding the base. 1913 to 1943. From 1% to 75% of population. In 1913, income tax applied to single people earning above $3,000 and married couples above $4,000. At 1,913 income levels, that was less than 1% of the population. About 425,000 people filed tax returns in 1914. The rate was 1% up to $20,000. Then graduated to 6% above $500,000. Total revenue collected in 1914 was $71 million. That's about $2 billion in today's money. Tiny. The government budget was $725 million. Income tax was 10% of revenue. Tariffs were still 60%. Income tax was supplemental, not primary. But that changed fast. In 1916, the top rate was raised to 15%. The exemption was lowered to $2,000 for married couples. More people were taxed. In 1917, World War I, the top rate jumped to 67%. The exemption dropped to $1,000. Revenue exploded to $1 billion. By 1918, the top rate was 77%. The exemption was still $1,000, but inflation meant more people qualified. 5 million people filed returns in 1918, 10 times more than 1914. After the war, rates dropped slightly. By 1925, the top rate was down to 25%. But the expansion didn't stop. The Great Depression hit in 1929. The government needed revenue. By 1932, the top rate was back to 63%. The exemption was lowered to $1,000 for singles, $2,500 for married. More people paid. By 1936, 7 million people filed returns. Still only 5% of the population. But growing. Then World War II. This was the moment the income tax became universal. In 1940, the exemption was $2,000 for married couples. 15 million people filed returns. 11% of the population. The top rate was 81%. By 1941, war spending exploded. The government needed money. Lots of it. The exemption was cut to $1,500 for married. The rates rose. The top rate hit 88%. By 1942, the exemption was slashed to $1,200. 27 million people filed returns. 20% of the population. Revenue was $5 billion. By 1943, the exemption dropped to $624 for singles, $1,200 for married. The top rate was 94%. 94%. Nearly confiscatory. And here's the critical change. At $624 exemption, 75% of workers now paid income tax. The tax that applied to 1% in 1913 now applied to 75% in 1943. In 30 years, it had gone from elite tax to mass tax. But there was a problem. Collecting taxes from 43 million people was impossible. The IRS didn't have the infrastructure. People didn't have the money to pay annually. Many couldn't calculate their taxes. The system was breaking. And that's when they implemented the stroke of genius. Automatic withholding. Step 3. Making it automatic. 1943. The Current Tax Payment Act. Before 1943, you paid income tax once per year. You filed a return in March for the previous year's income. You calculated what you owed. You wrote a check. This created problems. First, people didn't have the cash. They'd spent their income over the year. Coming up with a lump sum was difficult. Second, people resisted. Writing a check to the government hurt. You saw the money leave. You felt the pain. Many people simply didn't pay. Enforcement was difficult. The IRS couldn't chase 43 million people. The government needed a better system. Beardsley Ruml, chairman of the New York Federal Reserve Bank and treasurer of Macy's department store, proposed the solution. Automatic withholding. Here's how it worked. Employers would calculate the tax on each paycheck. They would withhold it before paying the employee. They would send it to the government. The employee would receive the net amount. Never seeing the tax. Never touching it. Never making a choice to pay. It just disappeared. The government got the money immediately. The employee got less but didn't feel the pain of payment. Congress passed the Current Tax Payment Act in June 1943. It took effect immediately. By July 1, 1943, every employer in America was withholding income tax from paychecks. And this changed everything. Here's why withholding is genius. When you write a check to the government, you feel the loss. You see your bank account decrease. You experience the pain of taxation. You resist. But when the tax is withheld before you receive your paycheck, you never have the money. You can't miss what you never had. Your paycheck is $1,000 after withholding. You don't think, I earned $1,300 and the government took $300. You think, I make $1,000. The $300 is invisible. And there's a second effect. Withholding is automatic. You don't choose to pay. You can't refuse. You can't delay. Your employer is the enforcer. If your employer doesn't withhold, they face penalties. They're motivated to comply. You have no choice in the matter. This removed all resistance. Before withholding, 30% of people didn't pay on time. After withholding, compliance was 95%. The government had found the perfect mechanism. Take the money before the citizen can spend it. Make it automatic. Make it invisible. Make it unavoidable. And that mechanism has been in place for 82 years. Every paycheck since 1943, the tax is taken first. You get what's left. You never had a choice. And once withholding was established, the expansion accelerated. By 1945, the exemption was $500. 80% of workers paid income tax. By 1950, the top rate was 91%. The exemption was $600. 85% paid. By 1960, 90% of workers paid income tax. The tax that started at 1% for 1% of the population now took up to 91% from 90% of the population. Step 4. Closing the exits. 1960 to 2025. Eliminating escape routes. For wealthy people, the expansion of income tax created incentive to avoid it. If the government takes 91% of your income, you find ways not to report income. The wealthy used multiple strategies. Offshore accounts. Swiss banks famously didn't report account information. You could hide money in Switzerland. Nobody would know. Tax havens. Monaco, Cayman Islands, British Virgin Islands. No income tax. Move your money there. Shield it from taxation. Corporate structures. Create a corporation in a tax haven. Route income through the corporation. Pay yourself dividends at lower rates or defer indefinitely. Trusts and foundations. Put assets in a trust. The trust owns it. You control it. But legally, it's not your income. These strategies worked for decades. The wealthy paid far less than the top marginal rate. Effective tax rates for the top 1% were 15% to 20% even when the marginal rate was 91%. The government knew this. They started closing the exits. In 1961, the Kennedy administration pushed for international tax reporting. Limited success. Most countries refused to cooperate. In 1970, the Bank Secrecy Act required U.S. banks to report large transactions. Domestic monitoring increased. Offshore was still safe. In 1984, the IRS started Offshore Voluntary Compliance Initiative. Amnesty for those who disclosed hidden accounts. Some complied. Most didn't. In 2001, the Patriot Act expanded financial surveillance in the name of fighting terrorism. Banks had to report suspicious activity. Suspicious was broadly defined. More monitoring. In 2010, FATCA, the Foreign Account Tax Compliance Act. This was the breakthrough. FATCA requires every foreign bank to report U.S. citizen accounts to the IRS. Every bank. Globally. If a bank doesn't comply, they face 30% withholding on any U.S. source payments. That's a death sentence for international banks. They need access to U.S. markets. So they comply. By 2015, over 100 countries signed agreements to implement FATCA. Swiss banks started reporting U.S. accounts. Caribbean tax havens started reporting. Even Singapore, Hong Kong, eventually complied. The offshore secrecy was dead. And it wasn't just the U.S. In 2014, the OECD launched the Common Reporting Standard, CRS. This is FATCA for everyone. Every country reports every account holder to their home country. 140 countries participate as of 2025. Automatic exchange of information. Your bank in Switzerland reports your account to Switzerland. Switzerland reports to your home country. Your home country knows everything. There's no hiding. The tax havens still exist legally. But they're transparent. Monaco has no income tax. But if you're a U.S. citizen living in Monaco with a Monaco bank account, the bank reports to the U.S. You still owe U.S. taxes. The haven is worthless. By 2025, there are essentially no offshore secrets. Every account is reported. Every transaction is tracked. The digital surveillance is total. Step 5. Total surveillance. 2025. The digital panopticon. The current system goes beyond reporting. It's real-time surveillance. Every transaction you make is tracked. Credit cards, debit cards, bank transfers, all reported. The IRS receives 1099 forms for every payment above $600. Employers send W-2s. Banks send 1099 INT for interest. Brokers send 1099B for stock sales. Gig platforms send 1099K for payments. In 2023, Venmo, PayPal, Cash App started sending 1099K for transactions above $600. Every digital payment is reported. The IRS knows your income before you file your return. They're just checking if you report it correctly. And the monitoring is expanding. Cryptocurrency exchanges now report transactions. Every Bitcoin sale, every trade, reported to IRS. Real estate transactions reported. Every home sale, every rental income, reported. Even cash is monitored. Deposit 10,000 cash, the bank files a currency transaction report. The government knows. The system is automated. IRS computers match your reported income against the 1099 forms. Discrepancies are flagged immediately. Audits are automated. You don't need humans to catch cheaters. The algorithm does it. And internationally, the surveillance is coordinating. The US shares data with 100 countries under FATCA and CRS. European countries share with each other. Tax authorities coordinate investigations. If you move money from US to Switzerland to Singapore, all three governments know. The chain is tracked. There is no escape. And here's what's coming next. Central bank digital currencies, CBDCs. When money is fully digital and controlled by central banks, every transaction is visible to the government. They don't need to wait for reports. They see it in real time. They can enforce taxes instantly. You earn money. The CBDC system calculates the tax. It's deducted automatically before you can spend it. Withholding on steroids. This isn't theoretical. China's digital yuan already has this capability. The European Central Bank's digital euro is designed for it. The US digital dollar will have it. By 2030, cash may be obsolete. All money is digital. All transactions are tracked. All taxes are automatic. The system is complete. And you cannot escape. Let me show you how total the trap has become. In 1913, you could choose not to work and not pay income tax. Subsistence farming. Barter. Cash economy. The government couldn't track it. By 1943, if you worked for an employer, you paid. But if you were self-employed, you could hide income. Cash transactions weren't reported. By 1980, if you had offshore accounts, you could hide wealth. Swiss secrecy protected you. By 2010, if you used cryptocurrency, you could evade detection. Bitcoin was anonymous. By 2025, there is no escape. Work for employer, automatic withholding. Self-employed, all payments reported via 1099. Offshore, all accounts reported via FATCA and CRS. Cryptocurrency, all exchanges report to IRS. Cash deposits flagged above 10,000. Digital money, every transaction tracked. You cannot hide. You cannot avoid. You cannot escape. You pay. The only question is how much. And that brings us to the rates. Because the promise was low rates. Let's see what happened. In 1913, the top rate was 7%. Total tax burden was less than 10% of GDP. By 1918, the top rate was 77%. Total tax burden 15% of GDP. By 1944, the top rate was 94%. Total tax burden 25% of GDP. After World War II, they promised to lower it. By 1950, the top rate was 91%. Still confiscatory. It stayed at 91% until 1964. Kennedy lowered it to 70%. Still enormous. Reagan lowered it to 50% in 1982. Then 28% in 1988. People thought the burden was decreasing. Wrong. The top marginal rate decreased. But the total tax burden increased. In 1988, total federal taxes were 18% of GDP. At state and local, 30% of GDP. By 2000, total tax burden was 35% of GDP. By 2025, total tax burden is 38% of GDP for federal, state, and local combined. The average worker pays 25% to 35% of income in total taxes. Income tax, payroll tax, sales tax, property tax, excise taxes. Add it all up. 1/3 of income goes to government. And that's the average. High earners in high tax states pay 50% to 60%. California, New York, New Jersey. 13% state income tax. 37% federal. 3% to 4% local. 53% to 54% total. You work. The government takes more than half. You keep less than half. This is the system they built. Starting from 1% on 1% of the population. Now 35% on 100% of the population. And it's still expanding. Here's what's happening right now in 2025. The US government is discussing a wealth tax. Tax on unrealized gains. You own stock. It increases in value. You haven't sold it. You still pay tax on the gain. This is taxation without income. Pure wealth confiscation. Multiple countries are implementing it. The exit tax is expanding. If you renounce US citizenship to escape taxes, you pay an exit tax on all your assets. It's calculated as if you sold everything the day you renounce. You owe capital gains on unrealized appreciation. The tax can be millions. And renouncing doesn't help if you have US assets. The US still taxes those. You can't escape by leaving. And the rates are climbing again. The Biden administration proposed raising the top rate from 37% back to 39.6%. Multiple states raised income taxes. Oregon, Minnesota, Massachusetts. The burden is increasing. And with debt at $36 trillion, the pressure for higher taxes is enormous. The government needs revenue. You have income. They will take more. It's mathematical. The debt must be serviced. The spending won't stop. The revenue must increase. The only source is you. Your income. Your wealth. Your assets. They will take more. Every year. More. Until there's nothing left to take. Let me show you the progression clearly. 1913, income tax introduced. 1% rate. 1% of population. Promise, only the rich pay. 1918, rate rises to 77%. Still only rich. But more people defined as rich. 1943, automatic withholding. 75% of population now pays. Rate up to 94%. Promise broken. 1960, 90% of population pays. Withholding makes it automatic. Resistance is impossible. 2010, FATCA closes offshore loopholes. All foreign accounts reported. No escape internationally. 2025, digital surveillance is total. Every transaction tracked. Every account reported. No escape anywhere. 2030, CBDCs make tax withholding instant and automatic on all transactions. The system is complete. The trap is total. From 1% to 100% in 117 years. From voluntary to automatic in 82 years. From hidden money to total surveillance in 15 years. The progression is clear. The direction is obvious. And it's accelerating. Each new technology enables more control. Each new law closes more exits. Each new crisis justifies higher rates. The system expands. Always expands. Never contracts. And here's why you can't fight it. The tax system has 4 layers of inevitability. Layer 1, automatic withholding. You never see the money. You can't refuse to pay. Your employer is the enforcer. Layer 2, information reporting. Every payment you receive is reported to the government before you file your return. They know what you earned. They're checking if you report it. Layer 3, international cooperation. 140 countries exchange information. Offshore hiding is dead. Moving money is tracked. Layer 4, digital surveillance. Every transaction is recorded. Every account is monitored. AI systems detect anomalies. Evasion is impossible. These 4 layers create a system you cannot escape. You can't hide income. It's reported. You can't refuse to pay. It's withheld. You can't move money offshore. It's tracked. You can't use cash. Large amounts are flagged. You're trapped. Completely. And the enforcement is brutal. Fail to file, you face penalties. 5% per month up to 25% of tax owed. Fail to pay, more penalties. 0.5% per month. Underreport income, penalties of 20% of the underreported amount. Fraud, penalties of 75%. Jail time possible. The IRS has unlimited resources. They can audit you for 3 years. Longer if they suspect fraud. They can seize your wages. Garnish your bank accounts. Place liens on your property. You cannot win against them. The system is designed to make resistance impossible and compliance inevitable. And here's the future they're building. Universal basic income funded by automatic taxation. Every citizen receives a payment. But it's already taxed. You get the net. The government controls both sides. Negative interest rates on savings. You pay to hold money in a bank. This forces spending. Spending is taxed. The government gets revenue either way. Programmable money through CBDCs. The government can set expiration dates. Spend it or lose it. They can limit what you buy. Alcohol, guns, whatever they choose. They can enforce taxes automatically. Your CBDC wallet calculates tax on every transaction and pays it before you complete the purchase. Social credit scoring. China already has this. Bad behavior, your taxes increase. Good behavior, slight decrease. But the baseline keeps rising. Tax compliance becomes behavior control. This is the endpoint. Total financial control through total tax surveillance. Every transaction tracked. Every dollar accounted for. Every citizen monitored. And the taxation is automatic, unavoidable, and constantly increasing. This is what they built. Starting from a promise in 1913. 1% on the richest 1%. Temporary. Limited. Fair. By 2025, it's 35% on everyone. Automatic. Unavoidable. Expanding. And by 2035, it will be 40%, 45%, 50%. Fully automated. Fully surveilled. Fully enforced. Globally coordinated. Digitally controlled. You cannot escape. You cannot hide. You cannot resist. You pay. The question is no longer if you'll pay. It's how much they'll take. And the answer is always more. The system they built is perfect. Perfect for them. Every technological advance gives them more control. Computers automated enforcement. The internet enabled information sharing. Digital banking made every transaction visible. Cryptocurrency exchanges became reporting entities. And CBDCs will complete the circle. Every dollar tracked. Every transaction taxed. Every citizen monitored. This isn't conspiracy. This is documented progression. The laws are public. The treaties are signed. The technology exists. The infrastructure is built. They're just waiting to flip the switch. And the justification is always ready. We need revenue for schools. For healthcare. For infrastructure. For defense. For the children. For fairness. For fighting inequality. The excuses change. The expansion continues. And you can't vote your way out. Both parties expand the system. Republicans and Democrats. Conservatives and liberals. All of them vote for more surveillance. More enforcement. More revenue. Because they all need money to fund their programs. And you have money. So they take it. More every year. Until there's nothing left. The trap they built in 1913 with a promise of 1% on the richest 1% has become a system that takes 35% from everyone and is accelerating toward 50% from everyone with total surveillance and no escape. And this happened in 112 years. One lifetime. From freedom to serfdom. From choice to compulsion. From privacy to surveillance. They built a tax system you can't escape. And now they're going to take everything you have.